Beef Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at HaneyFarms.com. We're joined right now on RealAgriculture.com by Ann Dunford for another edition of the Beef Market Update. Welcome today, Ann.
Hi, Sean.
And we're hanging out here today in Lethbridge at the Tiffin Conference. And we've had a full slate of speakers. And I guess the way I would really quickly sum it up is that we are optimistic as a beef industry, short and long term. What was kind of your impressions of today?
Well, I would say so as well from the parts that I caught. I got here a little bit late, but no question that was the message loud and clear. Lots of buts and ifs and big picture stuff, but there's no question from a supply perspective, the growing population, you know, the big warm fuzzy macro picture is warm and fuzzy.
Yeah.
And so you'd have to walk away saying that. But as I would also say, intertwined in anything I've heard so far today, and we're not quite done yet, is that there's still lots of ifs, buts, watch out, how many times did we hear the word volatility today?
Yeah, well, it was quite a few.
Yeah.
And you, in your presentation, you threw a few of those out as well.
Well, and it's because I think one of my biggest concerns when we get good, strong prices, at the cow-calf level, obviously profitable. We talked about questionable profit margins at some of the margin operator levels, but I think sometimes we get complacent then and in that environment. And I always worry about complacency, that we miss the boat, that swing up should have been a pricing signal to us and we thought, oh, it's going higher. So I worry about that. And so I guess I did use that message in my presentation today, Sean, that watch these signals, have your target prices, be ready to pull the trigger. These markets don't give you a few days to think about it. They're here and gone.
And well, you alluded to talking about corn today. If you think about come and gone, corn in August, $8 down. Now we're around closer to $6. There's an opportunity lost
Yes.
for corn growers in North America, and you don't want that. We're hearing some high cash numbers this week out of the U.S.
Exactly.
Same sort of scenario but it's tough though for the producer, I think, because you establish these higher highs, and it's like, well, it could go higher, and I don't want to make that mistake of booking too early.
Yeah, that's our classic fear, right? That it's going to go higher than we thought. I mean, break-evens for the summer cattle in the U.S. are 130. Well, futures markets until recently haven't been there. We like to buy the come in the market, as they put it. We're classic for it. But we've got a pile on the line when you've got $1.30 break-evens U.S. for summer 2012. Holy smokes.
You gotta not only be ready for volatility, but you gotta have a pretty strong stomach to.
Well, and the other thing we talked about is the credit that takes to operate under. So to fill a pen or to fill a feed yard or to whatever part of the business you're in, whether it's your input costs, your feeder cattle costs, your grain costs, whatever the case might be, it's all costing more to do business. So I'm just saying that. Go into this thing with eyes wide open.
It's interesting. We heard David Hughes talk just now. We just finished, and he talked about how in a lot of the world, especially in things like China and other areas of Asia, meat isn't like that centerpiece of the plate of food like it is here, right? We go for this big 16-ounce steak and we try to fit some potatoes and carrots on the plate. He talked about how in Asia, it's real meat is one of the 10 dishes that may be on the table. And I've heard different people who have gone to China that say that they don't eat meat there. But David Hughes said today they do. It's just in a different form.
Different form, and of course beef isn't often at the very top of that list. It's going to be pork or chicken or fish. So he talked a lot about the competitors, and beef is, we know we're the high price, the king of the proteins, if you will. So in this environment, especially as we start to move into emerging markets, as he talked about today, that we have to understand that they aren't like North Americans in consumption trends and specifically in beef consumption trends. So we have to, and again, one of his messages was, and he's probably given this to you already, but we got to know our consumer. That's a no-brainer. And our consumer isn't necessarily downtown Lethbridge or Calgary or Edmonton or Toronto even for that matter.
Yeah, the long-term success of the beef industry, and Charlie Gracie talked about it today, and we've talked about it too on our updates, it's not about domestic consumption. Domestic consumption is important, but that's not about the future growth of the industry. It's about export markets.
Yeah, and I think I talked today about basically the forecast for 2012, Canadian and U.S. demand really very flat. We're not looking for any real changes in beef demand in this. We could actually lose some ground, I think, as we go forward, just because we're going to have smaller supplies and questionable economic situation in North America. So the growth isn't here. The growth is elsewhere, and of course, I think that's what Charlie talked about.
And if we look at what's happening right now, those expensive feeder cattle, which we thought obviously were very expensive in the fall. Boy, they don't look too bad right now, do they?
Well, yeah, this market, and let's talk about that to kind of wrap things up here, but this market continues to surprise us. Here we are into the third week of January, or close to, and this market is a whole bunch better. We talked about all those on-feed placements coming out of the drought areas, being our big on-feed numbers all through the time frame we were worried about, Sean, was Dec, Jan, Feb.
Yeah.
So here we are, a third week through Jan. Market looks like it's going to trade at 126 today in Texas and Kansas, up from 123 last week, and kind of blowing the sheets off anything we thought we could do at this point in time. So there's a lot of people now going back and saying, okay, what's going on? Are exports better than we thought? Is that where the pull's coming from? Are there not as many cattle as we thought? Have these cattle, these lightweight drought cattle, did they get stretched out over a bigger time frame? Were they not that large? So you're going to get all these questions. Eventually we'll have the facts, but until we get there, this market is surprisingly strong, thank goodness, based on the break-evens we had coming into it.
Well, I'm very interested because in 2 weeks we're going to be at NCBA in Nashville. We'll do an update from there. How bullish, or what will be the atmosphere at NCBA this year?
Well, if you've kind of been a follower of the mainstream U.S. marketplace, because there's always people on the outsides of any of these markets, but if you've kind of been a follower, it was going to be that markets were going to kind of saunter, and maybe they still do, February is still ahead, but they were going to saunter down into the mid-teens for February U.S. fat cattle. And, today we're $10, $11, $12 off of that, above that. So it'll be interesting to see, I would think you're going to have a very buoyant atmosphere. This potentially sets up for even higher feeder cattle prices, which would also be supported by lower corn prices if that plays out, depending on how things go into seeding into spring. So there are 1,000 unknowns on the table, and right now I think you're going to get a pretty aggressive, buoyant, bullish crowd when you go to Nashville in 2 weeks.
And I just continue to think, I'm starting to be convinced that with the possibility of even higher feeder cattle prices in 2012, that eventually it has to sort of lure oh man, I really do need to be thinking about my herd size, or man, maybe I should get back into that. Like we're getting close to possibly pushing some of those people that said they would never do this again to start to reconsider those options.
Yeah, money will most certainly change some of those decisions, but at the same time, if you're a long-term cattle cycle player, you don't get in at the highs. This is an exit strategy. So it'll be interesting to see what plays out. If you exited at the low, very, very difficult, I think, from a credit fiscal perspective to bounce in at these levels.
Okay, Ann, we'll talk to you again in 2 weeks.
Okay, thanks, Sean.